it's John King with Summit Funding. I am recording this video in January of 2016, and we are going to be discussing the program for the Calhfa down payment assistance options. I give you the date because if it's been a while since this was recorded, you may want to reach out to me and check in to see if the rules have changed. It is not uncommon that these rules change periodically, so just be aware of that fact. So Calhfa is a state entity that provides down payment assistance loans. They made quite a few changes to their programs at the end of last year, so I wanted to explain those changes to you quickly and how that's going to work going forward. First of all, one of the mainstay products that we used for Calhfa is the CHDAP program, which was a down payment assistance program that we could use in conjunction with pretty much any other loan program, whether it was Calhfa's first mortgage or not. That program went away. It was discontinued in September of last year, September of 2015. So the new program that replaced that is the My Home program. The My Home program actually gives a 5% down payment loan at a 3% interest rate. So 5% of the purchase price is given at a 3% interest rate. They make no payments. They only have to pay it back after they refinance their primary mortgage. They have to pay it back when they sell the house, or they have to pay it back at the end of 30 years when they pay off the primary mortgage. This program is only allowed in conjunction with a Calhfa first mortgage. That's good news and bad news. Calhfa does conventional FHA and VA first mortgages, so we can do a loan with Calhfa and put this behind it or on top of it. For example, if we do an FHA first mortgage, there's a 3.5% down payment required. As of today, Calhfa's rates are 3.5% for an FHA loan. Current rates for the rest of the market are closer to 3.75, so they're about a 0.25% cheaper, better deal for your client. But the fees are higher on Calhfa loans. So you have to be aware of the fact that although you're getting down payment assistance, and it is helping, you don't get the dollar for dollar benefit if you were to compare a non-down payment assistance loan and say, gosh, if I'm getting 5% towards down payment assistance, then it should equal this much less in cash to close. The fees are higher on the Calhfa loans. But what you've got is you've got essentially 5% to put towards that 3.5% down payment. That leaves an extra 1.5% that covers the extra fees, and now all you have to do is have the buyer pay their closing costs, or you can negotiate for the seller to pay their closing costs. The best part is that Calhfa has an option if you cannot get a seller credit for closing costs or you don't want to try. And if you have an issue where the buyer doesn't have money to cover the closing costs themselves, Calhfa has what they call the ZIP program. Now last year they had something called ZIP Extra. The extra is gone. The extra was an extra dollar amount. I won't even confuse you by telling you how much it was, but that extra dollar amount is gone. But they will give a 3% of the purchase price loan as an additional loan on top of the 5% My Home for down payment assistance. So you're getting 8% of the purchase price as down payment assistance. That is huge, and that pretty much pays for all of the down payment and all of the closing costs on an FHA loan. Now they're paying no interest on that ZIP, so that 3% of the purchase price loan amount, they're not paying any interest on it. They still have to pay it back. It is a loan. But the bigger issue is they pay a higher interest rate on their primary mortgage. Today, as I told you a minute ago, without the ZIP, it's 3.5%. With the ZIP, it's at 4.125. That's still a screaming low interest rate, and those rates change every day. But it's a lot higher than if you didn't need that extra 3%. So if you can get a seller credit, or if the buyer has their own money for closing costs, that is the better way to go. Finally, they do have a conventional option. They have a conventional with as little as 3% down, but I strongly advise we go with the 5% down for multiple reasons. But we can layer the 5% My Home on top of that, and we can give them basically a zero down payment, and all they have to do is pay closing costs on their loan. Right now that rate's at about 4.125. The problem, or not the problem, another option is you can add the ZIP program. The ZIP program for the Calhfa on the conventional loan raises the rate to about 4.625, but it works the same way as a ZIP on FHA. And it allows the client to pay zero interest on a 3% of the purchase price loan. So they're getting the 5% purchase price on the My Home, 3% on the zip, so they've got 0 down payment plus 3% towards closing costs. They'll still need a few grand out of pocket because the closing costs are higher on down payment assistance loans, but it's a fantastic option. Even better is the mortgage insurance can go away on a conventional loan. So if you have a client that says, gosh, I don't want FHA because I have an issue with the property and it won't pass FHA inspections, or I don't want FHA because I don't want mortgage insurance forever, I don't want to pay the high mortgage insurance fees, the Calhfa conventional loan with the 5% My Home and the 3% zip, or without the zip, you get the better interest rate, is a phenomenal solution for your clients. So if you have any questions, feel free to give me a call. My number is 209-910-4019. If you have any clients that are interested in this program or just exploring options, whether they need help with down payment assistance or not, I'm here to serve you and to serve their needs. Please send them my direction. You can email us or call us. Our contact information is below. Thank you and have a wonderful day. Bye-bye. I wanted to add one more thing to the video that I just recorded for the Calhfa program. Two more things, actually. There are income limits, and so depending upon what the client program that they're doing and what county they're in, income limits in San Joaquin County as of January of 16 for conventional loans based on a family of 4 are about $79,550. For FHAs, about $76,250. If they're willing to go up to Galt or Sacramento County, we can go up to $91,000 conventional and $87,000 on FHA. The second and more important piece I wanted to talk about was with those income limits. Calhfa has a huge advantage in that A, they only require me to count the income of people who are living in the household on title and on the loan. So if someone doesn't meet all 3 of those criteria, I don't have to count their income towards the income limits. So this allows us significant flexibility in taking someone that may have too high of income and requalifying them by using either a non-occupant cosigner or by kicking off a spouse off of the loan and off of title. So the home is only owned in one spouse that makes lower income, although I can only use the income of that one lower spouse. If I use a non-occupant cosigner, I can count the income of that non-occupant cosigner without having to count their income towards the limit for qualification. A lot of flexibility with this program that I can help out a lot of your buyers. So if you have someone that was told, hey, I wish I could buy a home, but I can't because I don't have down payment, and if you've mentioned down payment assistance, some of them are going to say, I've tried, I make too much money. I have options to help rework things, and I've often been able to take people who think they make too much money, and genuinely do, and find a different way to skin the cat and be able to get them down payment assistance and get them into a home. So give me a call if you have anybody that you'd like us to review. We'd love the opportunity to help. Thanks and have a wonderful day. Bye-bye.